in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me, Sonia and Anuj. Diwali festivities, as you can see. But Sonia is preferring to spot what perhaps will be the color of the market after it discounts the events of the weekend. A very big event for the market to discount from Bihar. Hi, Sonia.
Hi Lata, good morning. Hi Anuj, morning. Yes, today is the start of the 5-day Diwali festivities. We begin with Dhanteras, so let's wish all our viewers a very prosperous festive season. It looks hard at this point with all the cues stacked up negatively, and more importantly, I don't think it's as much to do with the loss in Bihar. It's the magnitude of the loss with which BJP went out that could spook investors. But give and take everything, Lata, the market is still down about 3.7% in the last 2 weeks, so some of that has already been factored in.
I would think that. And it's not just that the 3.7%, it's almost every day of the past 2 weeks that the market has, ended lower, probably ended at the lowest point of the day. So you will have to say some part of it is factored in, but nevertheless, there is the magnitude of the defeat and the fact that the news has actually come. So at that point in time, there is always a negativity that has to be factored in. And plus, this will mean that as we get into, the announcement of the winter session dates and the actual winter session events, the practice politics in Rajya Sabha, all that will definitely take its toll on the market. So today there's some fall to happen. More of it could happen later on in the November and the December contracts as well. The Fed will also not help at this juncture. At the moment, you're only seeing Nikkei and Shanghai not reacting, but all the other markets are reacting to the possibility of a Fed rate hike because of the very strong job numbers. As well, the Chinese import data is very bad. That's 19% fall in imports. And while we are not, for us, China is not the biggest importing country, that also is a negative for a lot of the emerging markets. And what would have normally been a pillar of support for the market at such times, the pharma sector, which is one of the smartest performers over the past year or so, is now becoming a drag for the markets. First it was Dr. Reddy's, and this morning it will be Sun Pharma. So even that pillar of defensive support is not there for the market. I want to just leave with one positivity, and that's what might come from the banking sector. It looks like a lot of poison is out when you look at Bank of Baroda and you looked at the performance of State Bank of India. And the final interview we had with Arundhati Bhattacharya, that now she thinks the worst is over, and this year SBI can even give a 14% credit growth. And coming from a person who has proved her mettle, I would take that as one of the positives which perhaps at some point in time, after all the negativity is out, could be a pillar of support for the market.
Okay, at this point, things look a bit bleak, but let's see how the day transpires. Anuj, morning, we were having this discussion yesterday. I mean, how at this point in time the market has corrected, but there is still the larger picture involved as to whether we'll get back to those yearly lows of 7,500 in the due course of time. What's the sense you're getting?
Morning, Sonia. So yes, on November 5th, actually, I had tweeted that, the gut feeling is that a Delhi-like thrashing for NDA is not ruled out, and that is something that the screen was telling. So, I mean, if I knew it, market knew it. I mean, it's simple because the market is smarter than all of us. So, the market has corrected from 8350 to 7900 without any major global weakness because the market was nervous about this. And you'll remember we discussed this about 4 weeks back or so, that forget about all the bravado that, Bihar doesn't matter, it matters, at least for the near term. And that's what you're seeing right now. What you may see today is, because the smart money has already been selling, what you may see today is actually the market seeing a bit of a near-term bottom, maybe around 7,800. The SGX Nifty is indicating somewhere around 7,840 or 7,850, or maybe even lower actually now. So my sense is that it should be the first logical support for the Nifty. Anyway, you'll remember that that's the two levels we discussed, 7,800 in the worst case scenario and 8,200 in the best case scenario, purely from the Bihar election point of view. After that, it's all about, global cues and the second half of earnings season that we'll be entering into. My sense is that there's a bit of a consensus that at 7,800 they would be buying. Every dip would be bought. First dip would be bought. That's the worry, that yes, the first dip would be bought, but will the market fall after that? Because this market has now become a firm sell-on rally market. So that's the problem for this market, that in the second half, if there's a recovery, will this market be sold into? FIs have sold index options at 8,000 call, so that's the peak for the market for the near term. For me, the bigger worry is, does the market go back to the previous low of 75.40 to test if that was a durable bottom or not, that classical double bottom, and that's the word which will be out over the next 3 or 4 weeks.
Okay, I think we should put this to the expert who's waiting by, Saurabh Mukherjee.